The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we come to you at this time of day.
The following takes place between 2 p.m. and 3 p.m.
And we have some interesting stuff to talk about. We're off 4 points on the S&P. Cash volume is a little less than yesterday, 2.3 billion shares. Maybe in there. Yeah, but as I said on Tuesday when I came back, my working theory was that we were in a trading range. I thought maybe the Dow may have tried to pop this morning and gone a little higher. Most of the option players were looking at that. So we keep on looking at it, but I wasn't really thinking that we were going to break down or break up in the S&P. The Dow being only 30 stocks, of which 96% of all of the shares are institutionally owned. Only about 4% are owned by retail traders for any one period. If you're going to buy stodgy, dodgy Dow dogs like the Dow, you pretty much not much of a trader. So most of those are, like I said, owned. So it didn't take a lot to move them up or down. Too many ETFs mean that they have to have a share, whether it's going up or down. So very tough to say that 30 stocks out of a universe of about 5,000 really traded stocks in the U.S. Mean anything. So they can move that up a couple hundred points. Anyway, a lot of option players were betting on that going into the end of the day yesterday. So I thought maybe would bounce up a little higher. But, this range in the S&P looks pretty fixed, and it's probably going to take some dynamite to move us out. Maybe we get some of that market dynamite tomorrow with jobs numbers. But I don't think so. I think we're going to kind of just stumble up into and around about the 20th. That coincides with the inauguration, but more importantly to me, I think it starts to really show the depth of earnings coming back at us again. 2.3 billion shares. Yeah, we're off 4 points on the S&P cash. We did get down to 2260. A lot of people were yelling and screaming. A lot of shorts. And I was talking to one of our den members, I think it was yesterday, the day before, but there's this kind of pattern that happens a lot, and it happens late in cycles of the market. But it is a lot of people are bearish, and they all pile in early in the morning, and they all got squeezed out by the afternoon. And they all pile in, and it's been about 10 o'clock, maybe 10, 11 o'clock. You start seeing a lot of people pile in on the market. I don't know if they're retail traders. Generally, you don't see that kind of action except for retail and maybe some hedge funds. Most of the big players, they don't do their action till late in the day. They'll put in their orders at 2 o'clock or 2:30 and try to do that. There may be some playing around in the morning, but they may buy in the morning. But I'd say 80% of the business is in the afternoon, and why we watch the close and why it's more important. The old saying on Wall Street is that the open belongs to the rubes and the close belongs to the pros. And they just have so much more money than us that at least for a while, and generally longer than you can hold a position against them, they can move the market because of their size. We have to be a little bit more like the small animals, why they are the giant dinosaurs out there. They are low and slow. We have to be fast and quick and agile. but can do that. Anyway, we're off 3 points in the S&P cash. Not all that much happening out here today, but you wonder how things just continue to kind of go around and around. Well, that's why we always like a little bit of history to start the show off.
Then it's all just a little bit of history repeating.
It is history repeating on this day in 1999. What did we have? That is Amazon.com announces its fourth quarter sales today in 1999. An amazing 250 million shares, up more than 200% from the same quarter a year earlier. Never mind, the company is gushing red ink. The stock surges $6.18 to $124.50. It continues to go up. But this is when it didn't matter how much money you were losing, how many clicks that you could get. I can't remember exactly. I'd have to go back and look at the charts. I know that this eventually goes back in the next 2 years to $10 from 124, giving you quite the haircut. And then it continues to go sideways till about, 2003 or 2000? Yeah, 2003. And then it continues to do nothing but go higher. I have been rather bearish on it lately. I think it was up $17, if I remember right. Just get a quick quote here on it. Yeah, that's up $21 right now, $7.78, kind of on the higher end of what's going on in that trading range. But I continue to think that this thing's probably going to have problems, as it has in the past when they start spending lots of cash. And this was one of those stocks where people held. They believed in it, and it's done well for them. But man, you would have much rather been long at $10 than $124, wouldn't you? Anyway, on this day in 1999, the long shadow of a euphoric market shows itself. Other things going on out here, of course, most people talking about the dollar. I had kind of a thing where I put out to my subscribers yesterday that I'm kind of bullish, a little bit more bullish now as the dollar comes down. A great deal of this movement, in fact, I'd say 80% of the dollar movement right now has been the Chinese government's arm and what they are literally doing internally to press up the yuan. There's a lot of yelling and screaming and gnashing of teeth by people that have been wrong for the last 2 years about many things. And I guess they just can't help but continue to be wrong. But their thoughts are, well, you don't want to scare the Chinese. Oh, I have a feeling that these guys they're pretty much grown-ups. Someone saying some little thing is not going to turn the Chinese or make them do anything different. Everybody, they'll sell their bonds. Well, they've been selling their bonds for a year and a half or 2 years. What do they have? Quarter left of what they had? They've been selling their bonds forever. So what's going on out here? Well, it's one of two things, and we're going to talk about it. It has to do with Bitcoin, and Bitcoin's crashed today. At the high earlier today, it was at $1,153. At its low, $887. We'll talk more about this and more on the special edition of the Power Trading Hour.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I wasn't sure yesterday. I wrote about it in my daily newsletter both days, but and even had a special report out after the show yesterday. But I knew the Chinese government was doing it. It's very tough to figure out exactly what they're doing, how long they will do, what they're, telling what a million people are going to do on average is fairly easy. Telling a handful of people that run a country like China what they're going to do is a little weird. But what had been happening in China is a great deal of the people living in China are doing anything that they can to get their cash out of China, whether it's U.S. And other places in real estate. And of course, China continues and did continue to push down on their currency. A lot of people think that this is because Donald Trump yelling and screaming. I don't know. It could be more self-serving for the Chinese. Let's talk an alternate theory. And that is that they see maybe earnings coming down and maybe a lot of complaints about the exchange rate on the dollar and what everybody's going to be complaining about, maybe something that would slow the world economy down. So maybe they want to take the pressure off the dollar a little bit, maybe through the inauguration, if you believe in scenario one, i.e. they're doing it because of a new president. I weigh more to the second part of it, which is that they see that maybe the markets in the world is slowing down a little bit because maybe they price that yuan a little bit too low. In any effect, they went and did and pushed a great deal of the latecomers into Bitcoin out today. Why it is anonymous, apparently you can tell by where the brokers are for Bitcoin. And a lot of the Japanese, Korean Bitcoin vendors out there have been getting all the action, and it looks like a great deal of it is from Chinese citizens trying to put their cash anywhere that the Chi-Coms can't get a hold of it. I think much more likely the Chinese government sees this and they wanted to run a lot of people out the back door. I should have been wise to this because one of our faithful in the den was telling me just a couple of days ago how much he wanted to be in Bitcoin, and I should have known it. His name will remain nameless, Fletch. But anyway, we have to look at it and think of it. But is this just a manipulation to try to get people to quit taking their cash out of China? Is it a bigger issue with Trump, or is it more of an issue with the global slowdown? I pick number 3, that they kind of know that if they continue to keep the pressure on for a lower yuan, that it becomes a problem. But just one man's opinion. I don't know if anybody can tell exactly what's going on, because you'd have to ask them why they're doing it. And I don't know if you'd ever get the truth. But an interesting idea. But if you wondered what was going on and you thought maybe it was just everybody decided to get into the dollar, I have a feeling that that is not the right answer at all. I think the answer is and revolves all around the Chinese. But why? Pretty deep question out there. But I will speculate that door number 3 is the one that I'm walking through. And on the back of this Bitcoin move out here, maybe they're more than willing to try to make it tough for those in China to continue on. Are you familiar with Overstock.com's involvement in Bitcoin area? I remember the articles maybe a couple of years ago, but I can't remember exactly if it made any difference. I don't think it has. The only company I know that's done a lot of money and business on Bitcoin that really is any big news at all was the Silk Road. And of course that got shut down. So there's some pretty small business, but for the most part, people are just using it as a place to get cash out of countries, mostly communist countries. If you've got a little bit of cash and you're worried about everybody else coming taking it, Bitcoin is one of the last places where you can hide a little cash, and that's kind of it. Anyway, after the bell tonight, we've got the Container Store. Really started into getting into some earnings after or into next week. We had a few today. We'll look again. Of course, most of these were in the retail space, and all of them were pretty horrible. If you didn't catch it, or if you're just catching up, Macy's, they're closing a huge amounts of stores, had a big miss. They were projecting much better numbers. They kind of came in as everybody thought that they would back in September. So they were guiding up into the end of the year, vastly moved it. They're going to be shutting down a great deal of their stores. I can't remember if it was 66 or 166, but I'm going to say that anybody that are these big mall owners are going to be in big trouble. We looked at some of those in the den earlier around 10 o'clock hour. I'll go back and look at my screen out here. In fact, I probably ought to pop that up. Hang on just a second. So we'll go through these as these do. You can always give me a call at 877-927-6648. You can also send me emails. Okay. And yeah, I got 2 things going on here at once. Okay, what am I trying to do? Oh, that's what I was trying to do. I wanted to get my screens, the movers today. And we'll just talk through them, and I'll look at them later. Oh, I was talking about a couple of companies in the den I wanted to get back to, because I hadn't really thought about it. But the way these things are reacting today, I have a feeling that a lot of the downside in these mall owners is already baked in. General Growth Properties, GGP is the symbol on one. It's off maybe 0.25%. It was down like 4% earlier. Simon Group, SPG, is off about 0.4%. But the actual companies, JCPenney off 5.5%. Kohl's was a disaster at 18, almost 19% lower. L Brands, which is Victoria's Secret, and I know her secret, off 7.7%. Macy's off 14%. So that kind of gives you a roundup of what's going on in retail. None of it any good. A lot of discussion after the bell last night on financial infotainment about buying these. I think you would have been rather scorched. They haven't done much better. These companies like Simon Property Group, SPG, take a quick look here. Give you an idea. It did gap down to its previous gap at 178, where this thing kind of gapped up on the 3rd, and really not doing that badly out here today. The only thing that makes me think is that these guys either have new customers moving in, which doesn't seem plausible for bricks and mortar. The other thing would be that it's already been priced in to these companies. They were expecting these guys to pull out of the weaker malls, although I think Simon may have the better malls. I don't know this sector well enough, but I think the price action can tell you a little bit about SPG not being off that badly, with Macy's losing and leaving a bunch. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we said, a lot of stuff going on out here. We had a few stocks gap down, but again, most of this is all about retail. Target gap down, went much lower, down to $70.85. It kind of recovered mostly out here. Not a lot of volume, though, and again, that goes back to the same thing going on in the market. I can't really say that the move down had energy. We're only at 2.45 million shares, and in fact, looks like we're probably going to close flat on the day. But again, not a lot of movement. We got a lot of people that short earlier in the day. They cover before the end of the day, and that keeps moving the markets up for the most part. Going to have a few stocks out here that are flat. But I think this afternoon we're going to see a lot of people blink if they shorted earlier in the day. So you're probably going to have a decent close by the end of the day. Dollar index at 101.52 if you didn't get a look at that. And anything else going on out here? Okay. More emails. Take a look at it. We'll get to those and get rid of a few of these other emails. As we said, retail stocks pretty much were the ones gapping down, but even those have started to pull back and up a little bit. TJ Maxx, the clothes retailer, doing a little bit better out here today. Volume probably going to be a little bit more than it has been the last few days, but nothing tremendously exciting. UAL also gapped down today and has continued to sell off through the most of the day. And this thing does have a gap right at about $69. Looks like it's been kind of working its way down there for a while. Volume is not all that intense. You do want this thing to probably come in with less than about 3 million shares at that 69, 68.50 level to see what's going on in it. There was some other ones out here. AEO, which is American Eagle Outfitters, it gapped down too. And it's down at the low end of its range, probably one of the weaker of the mall stores. Crombie and Fitch, another one that gapped down. This one looks like it could go back and test its previous low of January 3rd at 11.53. That's not much farther down. But again, retail, pretty much the weakest of the bunch. Wanted to see how Best Buy actually reacted because this thing was coming into its gap up and sign of strength on the last earnings cycle, which was on the 17th of November. This gapped up with 25.5 million shares. Got into it today with about 4.5 million shares. So Best Buy does not look weak here, but actually looks like maybe this thing could base out around $42. I know a lot of people have been looking at big screen televisions for a while, so we'll continue to do and look at that. See if there's anything else out here. Yeah, there was a few other ones. The Gap stores, another one that gapped down. It's predominantly in retail malls, and this one pretty much gapped down. It's making a little doji out here today. This $22.5 level looks like some level of support. You know, you bounced a little bit yesterday. You pulled right back in today. But again, the volume's not picking up so much that would make me think that the 22.5, 22.60 level isn't some level of support. You're going to need a lot more, I think, to break through that level. So we'll keep an eye on that. Didn't do JCPenney's yet either. But again, Macy's and probably the weakest of the bunch of the big stores are JCPenney's, right, of the mall guys? I would say so. They've had bigger problems. Self-inflicted wounds, 33 million shares today. That goes up against the last major low at this price range at 792 November 9th, where you had 13.3 million shares. And today we've got 33.5 million shares. So you are into these previous lows with a great deal of volume. You also have Nordstrom's. This one gapped down and into a sign of strength. So this one may be just a little bit better than the rest. About 6 million shares so far, going into a couple of nice gaps. The first one with about 14 million shares. The second one with about 15 million shares. So it's been going through and back through these lower levels. So you've got a little bit of increasing volume. I wouldn't be biting on this right now, but you're starting to see the wheat and the chaff get separated in a great deal of these. Let's take a look at stocks that have gapped up. real quick. Alibaba, again, on the yuan, losing value, especially to its next door neighbors. You wonder how much that the weak yuan is actually starting to hurt maybe China with exports. They're really trying to push Alibaba in many of the areas around Asia. But one thing, you got a huge move out here today, big candle, but the volume really isn't picked up to any kind of extent that would make me think that this is incredible. Your last major high on November 29th at 96 bucks came in with 14 million shares. You got about 12.4 million shares. So you're probably going to do and be into that candle with slightly more volume, but it's not the kind of thing that makes you really run. You got to figure that if the first scenario is correct on China, i.e. that they're doing this for the Trump inauguration, that this goes on to at least the 20th of January. That would make you think that this is probably going to hit 100 bucks out here. C-Trip, which is, of course, another one of the Chinese companies, pop up again. Not a lot of volume so far today. This one kind of into a ledge that gapped up and was a sign of strength that it's gone through and below before. This thing gapped up on the 25th of November with 15.7 million shares. You've come down, pretty much obliterated it, and you're now kind of back into that trading range. You would have liked to seen a lot more volume in C-Trip than you had today. VRX, Valiant Pharmaceuticals, tiny gap up there, not that exciting. So let's go to the percent advancer list that I have for today. A lot of gold stocks in here. Since Tom's going to cover those for the next 2 hours, I will probably take a look at some of the other ones. Are they all gold stocks? I think every one of them is. Maybe I'll just go through them quickly. First Majestic, nice pop up. Some decent volume. It could be a little bit more. We'll see how the close goes. AGI, Alamos Gold, up, volume better than the last few days. Would like to see the volume come in somewhere around the 5 million share. You might get it. Who knows how the end of the day goes. ALXN, which is Alexion Pharmaceutical, nice bounce back up to resistance and a big gap that's been hanging as overhang for a while. Kind of pulling back out of that gap. AU, of course, nice pop out here today. It's right back at the level of resistance that goes back to this ledge, and basically 3 straight big candles down to the 11th of November. So you're starting to get where you're going to have a lot of people that held Anglo Gold being willing sellers. We'll be back in a minute. We'll go through a few more of these gold stocks and then get to some others. The percent losers.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Trying to take care of a few too many things all at once out here. Cura Mining, CDE, nice bounce out here, volume picking up. You'd really like to see, 5.5 million shares. You got 5.2 million shares already. That 1198 looks like that would be kind of the first bounce that you'd be looking for out here. FSM, which is Fortuna Silver Mines, nice pop. It's right up against its resistance. Volume is a little bit more than that 675 going back at the first week of November. So not so bad looking. Goro, it's up and through and with volume and above it. So that one looks very interesting. 643 would be the next high. And what do I wanted to look at? Tahoe. This one's got a little lighter volume than the others. But it's a good day because all these things are breaking through the December 14th moves out here. So you're going to tell whether or not volume's better. 3.4 million shares right now compared to the 4.6 million shares. So make sure you watch and see how those all close at the end of the day. Did we do decliners? Fossil down and getting ready to go after its $23.10 low from November 4th. It gapped down and continued down, a little bit off its lows out here, but another $1.40 to get to that November 4th low. That had some decent volume. Now probably is going to come in with at least the same volume. So you have to look at that. Let's see if we have anything else. Weight Watchers on the decliner list, but man, what a huge move yesterday. Some newspaper came out and said that they were the best diet that you could get. That came out about 2:30 midway through my show. I didn't see it till after I was off, but a monster candle. A lot of shorts in this company, and of course this goes back to where they got the deal with Oprah. We can go back and look at it. This thing went from $6 to $28 in a handful of days. So we're kind of coming back to that. So what do you have after that? Zoomies, take a look at that one. This one gapped up with a sign of strength. Not looking too bad out here. You want to fill, or at least I like to see, half the gap up filled. So that'd take you to about $19, maybe $19.10. Oh, at October 6th, 3.4 million shares. We are coming back into that today with 500,000 shares. That's what I like. I like these charts that not a lot of equivocation out here. 600,000 shares compared to 3.4 million shares. I think the math is easy on that one. No calculus needed whatsoever. So kind of coming back to its strength. I don't know if this is a great company, but chart doesn't look all that bad. To see what else do we have. We'll look at a few of the ones that I was looking at lately and see how they were doing. Let's see if there's anything else going on out here that I wanted to talk about. Boston Properties. Those real estate stocks, I wanted to see how kind of these things were doing. A little bit better on Boston Properties today. And I was thinking maybe there'd be a little spin action on all those mall owners. But not so much. Up a little higher today. CLI, which is Mac Cali Realtor. This thing's been plugging away at this $29 region, hanging out here also. The energy off this last low, not all that exciting, but doesn't really look like this thing is pulling back whatsoever. You need about 1.1 million shares, which goes back to the September 7th high. My guess is when's their earning date out here. A lot of these stocks, like I said, I just think are going to kind of home and hang out up here with their little friends until earnings does come. Well, they're February 22nd, so that is a little ways away. CVI Energy, these things have been kind of coming off their highs. We saw a good test in CVR. We talked about it, I think, on Tuesday. This one had a 3.1 million share high in December 8th. Got into it on the 3rd with 1.2 million shares. It's rolled back in and starting to move down. Volume looks like it's going to increase at least a little bit over yesterday. I'm still not wildly bearish on crude here. I think maybe you could get one more run to the top before these things. And if you don't get volume, the things could roll over. CVR Refining, got a nice little doji out here on this one today. This one spiked hard on December 16th. Gave it all up, came back here, tried to hit it again, quarter shy on December 9th with 1.4 million shares. And today we got about 500,000 shares. So certainly these refiners have looked kind of weak the last few days. And this one is up on a little doji out here. So you want to watch that for a lower open tomorrow as a possibility. Dish Network's just going back to a little gap that it had. Car auction services, I wanted to see, and I think this one may get some pin action tomorrow. And that pin action is going to happen on those jobs numbers. Car auction services auctions off a bunch of cars. The repo rates have been kind of ticking up just a tad on housing, but even more than I think. I think it's like a tenth or a quarter of a point on housing. Not much, but it has been moving up on cars. In fact, a lot of the cars where they made subprime loans a few years ago when I was saying that was probably a very dangerous market. Now, this one spiked the previous high today. It's going to come in on light on volume. For the next couple of days, we want to see what's going on. If the market is probably going to, and the economy is going to stay strong, then you probably would assume this one is probably going to pull back into the trading range. If this might be a canary in the coal mine to say, you know what, there's more repos going on in cars, things may be happening there. What else do we have? Mohawk Carping, one of Buffett's big babies out here. This thing has been bouncing around at this resistance level at about 205. It had 1.3 million shares yesterday, just 300,000 shares to the downside today, though. So as we can see, some of these things giving kind of a idea that the show, at least at these highs, is not over yet. We also have Netflix out here hitting all-time highs out here. 133.27 is the December 7th high of 2015. We've come within a buck of that today. My guess is we're going to be looking at that as a 52-week high tomorrow. Well, it's probably already a 52-week high today, but actually more than a 52-week high. Tomorrow, 133.27. You need 26 million shares. Today, you got 12 million shares. So, again, kind of interesting. Netflix knocking at the very top end of its range. Not a lot of volume out here, but maybe that jobs number will get things going tomorrow. I will wait for that. We'll be back after this brief, very brief time out.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got a few other stocks out here. Wanted to see how Walmart did on the back of retail. Doesn't seem to have bothered it too much, other than it did open up a little lower today, but it's kind of moved back up $69. If you were interested in Walmart, you want to look at that October 13th low at $66.59. So not a whole lot going on there. When we take a look at Vonage Holdings, this is one that's busting through previous highs. That was a 13.7 million share high on October 26th. At 757, we went 3 cents above it. We pulled back into trading range, and you have 5 million shares. So if you were long this one, pretty good sign to at least get out. I wouldn't be shorting a $7 stock, but certainly fairly interesting. I had a few more emails during the break. Wanted me to look at least the chart of Amazon out here and see if anything was going on it today on its bounce. Had some nice volume. Again, pin action from the retailers, Macy's, those bunch. Everybody's thinking, okay, if it's bad for Macy's, someone's got to be going somewhere to buy stuff. If they're not going to JCPenney's, if they're not going to these mall stores, then the benefit has to go to Amazon. I think that's at least part of the thinking out here, at least today. Nice move out here again. Volume is not any kind of whip do. What I dislike or what I think is that you at least need to come back and test out the low from November 14th, which is 710. You really back into a day when this thing came down with 12 million shares and then 7 million shares. You're up today with 4.6 million shares. So is this horribly bearish? The answer is no, but is it a little bearish? The answer is yes. You pop back up into this trading range. And, the drum beat is this company's the best company in the world. And it's kind of hard to say no. The overlaying problem, of course, is its argument with the next administration and whether or not they have the antitrust guys coming after them. There's probably no other company other than Google that has such a clear case for antitrust as Amazon, as literally there's no business that they touch that they don't end up thinking that they're going to take over. From airlines to local deliveries to actually manufacturing some of the stuff themselves. Vertical companies in the past have been treated very poorly by antitrust legislation, and I don't think that's going to be any different. Eventually, Amazon's probably going to get split up. The question is when. Is it the next couple of years? Is it 10 years? Eventually, this behemoth will get broken up. Question is just when. Microsoft has been fairly strong. Wanted to take a quick look at that for John in Osceola. I guess since I mentioned him yesterday. Microsoft down again, light volume. I wanted to take a look at a few of these stocks. SNE, take a quick look at it too. I saw the CEO on CNBC today. This thing kind of came down and bounced off with lighter volume. The December 2nd. But again, Consumer Electronics Show really firing off today with the launch of what is traditionally the press day, and then a lot of people being able to pile in tomorrow. So next few days, you're going to see a lot of newspaper articles, a lot of TV about what's new in technology, and we'll see how that kind of shakes out. I haven't seen anything or heard anything that's really mind-boggling yet, so it looks like so far kind of a mundane CES. We'll talk about that more tomorrow. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.